The following is a presentation of TFNN. Live at TFNN. The Money Masters. Now, the Money Masters.
Good day, Money Masters and Treasure Hunters. Welcome to the July 25th, terrific Thursday edition of the Money Masters Show. I'm your host, Steve Rhodes, and I am grateful for your presence here today. My outcome, as always, is to help you to become a better money master and to provide you with tools that empower human potential, because living up to our potential is something that we must master each and every day. So let's begin with an empowering belief or two. You know, in order to succeed, this comes from Bill Cosby, in order to succeed, he says, your desire for success should be greater than your fear of failure. Think about that one. I am in absolute agreement with that. Your desire for success should be greater than your fear of failure. How about this one? If you want your children to turn out well, spend twice as much time with them and half as much money. That from Abigail Van Buren. How about this one here? Remember that the happiest people are not those getting more, but those giving more. That comes from H. Jackson Brown Jr. out here. And let's leave with the last one from none other than the Dalai Lama. It says this: remember that not getting what you want is sometimes a wonderful stroke of luck. How true that is. Think about that back in your life. Something that you wanted so badly, that you worked so hard for, that all of a sudden you just didn't get, and maybe you were disappointed. And the reality is that there turned out to be a stroke of luck. I don't know if that has ever happened to you, but it happened to me recently. In fact, I had been working very long and hard on building a automated trading strategy. It was a trading strategy I had shared with subscribers back many, many months ago. And it worked so well, and I was working on the ES Mini out there and different time frames. And so, you know, I was having different signals being sent to my phone. I'd be waking up early in the morning, checking out screens to see if I should take that trade or not. Decided to automate it. And I needed to put together several different pieces from some different applications in order for that to work. And the final piece, the pièce de résistance, well, we just couldn't get it to work. It wasn't giving me the signal that I needed so that I could make a total hands-free automated strategy. And this was after spending a lot of time, some good money into developing that strategy, and then now it's just on the shelf here for a while. But I got to tell you, I was depressed for at least a good old, 5 minutes or so. No, it was probably just a little bit longer than that. But I came back and I said, I got to figure out this piece of the puzzle, which led to what it is I'm going to be sharing with my subscribers and clients this evening. And it actually led to a system that provides for better results, even more consistent results out there. So I agree with the Dalai Lama that not getting what you want is sometimes a wonderful stroke of luck. It forced me to go back and take a look and say, well, what can I do with the tools that I know that I have right now? You know, folks, success, it leaves clues, and that's why you want to understand patterns out there. Candlestick charting as well. That's why I want you to understand how to read the message of the market. So let's go out here and read the message of the markets right now. We're going to start off by taking a look at the VIX index. Right now, the Dow is off 39 points. The S&P is flat. It's up 54 cents. NASDAQ Composite up 16 right now at 35.95. Russell 2000 up 3.5. NASDAQ 100 up 14. New York Stock Exchange just slightly positive, or slightly negative, I should say. We've got gold is up $5. Silver's up 11 pennies. Light sweet crude back 67 cents. We're going to start off by taking a look at the VIX, because I think this is going to be key. You know, today one of the tools that we most certainly use are taking a look at trend lines as support, trend lines as resistance, price channels, and so forth. In this case here, we're taking a look at a trend line coming off of the low in the VIX, which was on March 14th. That level, price point level, 1105. Next touch point from a trend standpoint, because this was trending higher, was May 17th. That touch point, $12.26. Well, running right into that trend line happened to be this little hammer candle as it came down and tested that area on July 18th. Gets down to 1320, forms a hammer candle, and that hammer got the kibosh, got the hammer beat out of it on July 19th as the VIX went ahead and moved lower. What we've seen here yesterday and what we're seeing here this morning is a test to try to get back inside that. So far, no go, but if the VIX does turn more positive right now, the VIX is up 6 pennies, so I wouldn't exactly call that positive. If it does get above that trend line, and where is that number? It's probably right around above yesterday's high, 1349, probably gets you right above that trend line. That'll be sending a signal to us about the market. Now, it'll still be below the 50-period exponential moving average, but the key here, and when the VIX gets above the 50-period exponential moving average, that's when you start to see significant market corrections. Otherwise, you can see it moving off of the bottom, maybe moving up to the 50, and then it would just be a normal pullback. But boy, once it gets above the 50 out there, beware, because that is when your serious damage gets done into the marketplace. That's using that 50-day exponential moving average. Let's go take a look at some of the other indexes out here. Let's take a look at the, we'll start off by taking a look at the S&P 500. S&P 500 right now, just flirting with the May 22nd high. Finally, we got a close below it yesterday. That high, 1687.18. So far, intraday, the high has been 1687.05. So it hasn't gotten all the way up to the top to test it, but it is below that. It is below that May 22nd high. That means it's in the lower part of the range as we speak right now. Let's go take a look at the SPY, see what the SPY is doing. Take a look at what kind of volume we may or may not have behind the move here. Right now, the SPY traveling below the May 22nd level. Got through it yesterday. Had a bearish engulfing candle, by the way, that took place on Tuesday. That's the candle session looking at July 23rd. This little doji spinning top candle here, highway, not really a highway, but candle that took place on July 22nd was really no problem to form a doji there because the body, let's face it, that wasn't much of a body. That was very, very small out there. But what we did get yesterday was confirmation with a lower close and volume. So we had some volume come back in. It was 112 million. Now it's nowhere near the volume. Nowhere near the volume on that May 22nd candle, which was 243 million shares. But of course, the SPY got above that area on lighter volume. Right now, signaling that was a false break. What does that bring back into play? Brings back into play two numbers to be paying attention to. Number one is going to be your June 24th area, 155 to 158-ish level. That area, if you're coming down there with volume, that'll send up a breakdown to the next level right around the 147-ish type mark. So that is inside the SPY. Let's go over. We haven't done this here lately, so I just brought this little tab back onto the system. Let's go take a look at the SPY on a 10-minute chart out here. Let's go see on this little bounce that we're having in the market, is there any conviction behind it? And if we take a look at the move down here this morning at 9:40, you had volume of about 4.9 million shares on this bounce up. Which way is volume going? Volume is going down. That is not what you want to see if you're bullish, that's for sure, because what it's saying is this bounce that we are seeing in the market is doing nothing more than, again, confirming what I was thinking earlier, what it's just simply working off that oversold condition that was formed in the futures market at 536, 630 this morning out here. So you can see no volume behind this bounce, behind this move here inside the SPY, at least as we speak. Let's take a look here at the diamonds. See what the diamonds are doing. The diamonds making a low here this morning. Now it's a 10-minute chart that we're looking at. 262,000 shares. As it's moving higher, it's doing it with 100,000 shares. So half the volume on the way up here. This actually doesn't look as bad as the SPY chart does, but still not exactly any conviction really behind its move. Let's go take a look at the daily ETF, see what the diamonds are doing. Then we'll go back to the actual Dow and take a look at its numbers as well. As we take a look at the diamonds below May 22nd, which is 155.14, closed slightly below that yesterday with 3.8 million shares. Of course, the volume on May 22nd was 13 million shares, so it got above it and did it on lighter volume. So far, rejection of that area. It's in the lower part of its trend, lower part of its range. I knew I could get that word out. Home on the range. And what the diamonds want to do is get all the way back to June 24th. That high volume bar down there, 14 million shares. That's going to be 145 to 147, 40-ish range out here. Let's take a look at the actual index, see what the Dow index is doing, give you the numbers there. As soon as I can find it, there we go, right down here. The May 22nd high, 15,542.40. And yesterday's close was 15,542.24, 16 pennies or so as a close below it. Nonetheless, that is where now what we're going to be paying attention to here on the move back, on the pullback, and this is where we'll get a real signal as to the depth of any pullback here. Is going to be that trend line inside the Dow. Maybe it works the same on the S&P 500, I don't know. But if we do take a look at that trend line in the Dow, we're coming off of the November 16th low. 12,471. Your next touch point is going to be December 31st, 12,883, and that level held coming into June 24th. Now, we have a high volume bar there on June 24th, but it still could be this trend line here that's going to really give us a signal, and that signal is when you break a trend, the trend certainly is your friend until it is broken out there. And so we're going to see, is it going to be the trend that gets broken because of that high volume that we have down here on June 24th, which could indicate a more serious correction than coming back there, but that's going to be an important area for us to be paying attention to. So that is inside the Dow. Let's go take a look at the Russell 2000. We'll take a look at the Russell 2000 as soon as I can find that here on my chart. Russell 2000 right now traveling on 1046.60. The Russell 2000 had formed an A to B equals CD up, which took it to the 1052 and change level, and then we've had 2 days of decline out here. Now, yesterday we had some conviction behind the move. It looks to me like the move inside the Russell is over as well. The Russell 2000, if the move is over, where will it come back to? It's going to come back to the May 22nd area. That's going to be its first real test out there. That's going to be at the 1008 level. So whereas the diamonds are going to come back to June 24th, I don't know that the Russell will actually make it back there, but that will be the key. So as the SPY and the S&P and the Dow are coming down into those areas, we're going to want to see what's going on inside the Russell as it attacks that May 22nd level. Because if that's the extent of the move, a touch and go, come back to those areas, come back on light volume, and the Russell 2000 is just coming back to May 22nd, here's where it is you want to be long and strong, would be inside the Russell 2000. If we go take a look at the ETF, take a look at the IWM, and see what it is doing here this morning. The IWM had formed that 1.618 butterfly pattern as well as the A to B equals CD up. It did create a bearish engulfing candle on today's Thursday. On Tuesday, yesterday you had some follow through, some decent volume, 31 million shares, nothing too substantial as it backed off, but still some decent volume out there. The volume that's going to be key is going to be May 22nd's high at 100.38. That's got 68 million shares. Let's look at the 10-minute chart of the IWM. Let's see if there's any conviction behind its bounce here this morning. Because this has been the lead dog here, right? So we should see some conviction. And it's just been real steady, nothing really growing here. This morning it opened down with 1 million shares. And it's been doing on the 10-minute chart 1 million shares each here. So really not too bad. Not exactly conviction, but not exactly weakness either. And I think you would expect that inside what has been the strong leader out there, which has been the small caps. 877-927-6648. We'll be right back, folks.
With over 3 decades of commodity trading experience, Andy Hecht has developed a system that combines both technicals and fundamentals. He calls this approach Technomental, and now you can put it to work for yourself with his brand new service, the Technomental Commodity Report. In this weekly newsletter, which comes out each Thursday morning, Andy gives you his analysis of the market price direction bias using fundamentals, and then specific trade recommendations including entry and exit points using technicals. The recommendations in the newsletter are always based on stocks and ETFs, so a futures account is not required, and Andy will often use options in the recommendations as well. Andy will tell you where to get in, where to get out, and he'll outline the risk-reward profile for all recommendations. To get your month-long free trial to the Technomental Commodity Report by Andy Hecht while locking in the low introductory rate, visit the front page of TFNN.com today.
with the launch of Tiger TV. TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, David White, Larry Pesavento, Andy Hecht, Victor Jones, or Terrell Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing.
You've always taken the long view when it comes to investing, but what if there's an opportunity right under your nose? What if you could be more responsive to market trends to seek to boost your portfolio performance right now while seeking to reduce your overall risk? At Direction Funds, we connect investors with alternative strategies that seek to maximize their returns. Smart investors deserve smart alternatives. Find yours at directionfunds.com. An investor should consider the investment objectives, risk charges, and expenses of Direction Funds carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Funds. To obtain a prospectus or summary prospectus, please contact the Direction Funds at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. Investing in index funds may be more volatile than investing in broadly diversified funds. Distributed by Rafferty Capital Markets, LLC.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen, live during those shows, and have access to all those charts. You can test drive the Tiger's Den, absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com.
McEwen Mining is a high-growth, mid-tier producer in the Americas with a market capitalization of $1 billion. Experienced mining executive Rob McEwen, as chairman, CEO, and president, owns 25% of the outstanding shares of McEwen Mining and has put in place an ambitious business plan with the goal of qualifying for inclusion in the S&P 500 by 2015. With $70 million in cash and liquid assets as of the end of 2012 and completely debt-free, McEwen Mining is poised for growth. Production in 2013 is forecasted to grow at 24%, reaching 130,000 gold equivalent ounces, and over the next 3 years, McEwen Mining projects that their production will increase to 290,000 gold equivalent ounces, almost a threefold increase from last year's totals. If you'd like to find out more about McEwen Mining, click on their banner on the front page of TFNN.com or check them out on the NYSE or TSX under the symbol MUX.
Steve takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. Dow's off about 40 points right now. S&P just slightly flat. Now, we're going to go take a look at the Qs. Kind of interesting out here. The NDX 100. Right now, got the Qs are trading out at 74.83, and that's where we've really seen some strength here in the marketplace. In fact, it's really the Qs, the composite, that are leading the charge here up. You've got the NDX 100 up a little over 0.4%, up 13 points. We're taking a look at the QQQ, the 10-minute, which I've got on the screen here, and we saw a quick little pop and drop at the open at 9:40. The open was at 74.89. Went ahead and sold off. Now the volume up there on that pop on the 10-minute chart, 1.4 million shares. The Qs have tried getting up here on 3 different occasions. The first one was at 10:10. Did volume of 468,000 shares. 468 going against 1.4 million shares. The next session that it tried was 344,000. That was coming into 1020. So we're now in the third session out here, but you can see not a lot of volume behind this move. Now I do have the relative strength, relative weakness indicator on the chart here as well. And what you can see is that in the 10-minute basis, what it's gone to is an overbought condition. But the whole point is that it's pushing into that swing point area with lighter volume out there inside the Qs, and that's the strength that's in the marketplace. That should make someone say, something to think about. Let's go take a look at the daily chart of the Qs as well. and then we'll take a look at the NDX 100. As we take a look at the Qs here, the Qs trading still below. They have been consistently below that May 22nd high after gapping down on July 19th. That May 22nd high is 74.95, so that is proving to be an area of very strong resistance right now, because the Qs have attempted 3, and now even today it's been up to 74.91. So, okay, it's missed it by 4 cents out there, but basically doesn't have the energy, and that's the strength in the marketplace, to get above that May 22nd level out here, or even close the gap. Now, a lot of time left in the trading session, but it should make you say, something to think about. Key number, folks, is going to be the number of 275 or more, and that's going to be on net declining issues. I don't know if I could give you my Paul Revere any louder than this. You get more than 275 net declining issues, and the Bears have picked up the ball. The Bulls will have fumbled, and if you are long, just make sure you've got some tight stops, or you've picked out spots on the your charts, whatever it is that you are trading, that you're willing to go ahead and give back those gains out there. You don't want to do that until you see the Bulls actually take control. Who's got the ball right now? Well, I can tell you that it's second down, and it looks like about second down, and it looks like the second down there, they threw an incomplete pass. It looks like we're now at third and goal here, because you've got net declining issues of 267 right now. 275 is a number. It doesn't matter what net declining issues are at 10:27 in the morning. It only matters what they are at 4 p.m. this afternoon. But that is something you absolutely want to keep your eye on, and you'll only hear that here at TFNN. Now let's go take a look here at the rest of the indexes out here. Let's go take a look at some of the things that we don't normally take a look at. Let's take a look at, when I say normally, not each day, let's take a look at the SOX. Let's take a look at the Philadelphia Semiconductor Index, see what she is doing out here, traveling out at 474.77. So it is now closed. It closed the gap here yesterday. The gap was the gap from July 10th to the 11th out there. What does that now set up? That now sets up, let me get rid of that line here. Let me get rid of this line out here. Looks like that's going to come all the way back to June 24th. Well, boy, how difficult was that of a call out here? So the SOX should be heading down to that June 24th area. Now, June 24th, you also have the gap up from May 3rd, which was tested once. That's the price level of 450.17. So if on this next test down here, that area holds, that'll start becoming a very strong area of support out here. So we're certainly going to want to keep our eyes on what the SOX is doing as it gets down into that area. Of course, that means that Intel and others should be having some struggles here. Intel right now is up 10 cents, but in any event, that's the area that you want to be paying attention to on the SOX. Let's take a look at the transports. Let's go see what the transports here are doing. The transports giving us a big reversal signal here 2 days ago on July 23rd out there. Some additional follow-through here. Yesterday, this was a 4-candle evening star pattern. That says that you've got some very strong resistance at 6608.87. If the decline has begun here, what the transports ought to do is make their way back into that June 24th level as well. Just cleaning up the chart while we are here at on TFNN. Now, what the transports have is this big old hammer candle back on April the 5th. That's going to be the key area to be paying attention to other than June 24th. Because if that hammer candle gets broken, which is a price level of 58.78, look out below. Yeah, there's a little bit of support here on this morning star pattern at about 57.89. But if that hammer candle gets broken, big trouble inside the transports. We'll be right back, folks.
With the stock market flirting with all-time highs and volatility back, now is the perfect time for a 2-week free trial to Market Insights. On Monday, June 24th, Tom O'Brien closed out all 5 open positions in his daily newsletter, Market Insights, with all trades being profitable and ranging from a 2.23% gain all the way to more than an 11% gain in just one position for an incredible 32.7% profit combined between the 5 trades. Let Tom O'Brien's years of market experience work for you. If you'd like to see for yourself what kind of trading newsletter Tom O'Brien delivers to his clients each morning, then now is a perfect time to sign up for a 2-week free trial to his daily newsletter, Market Insights. In a volatile market like we currently have, the potential for fast market moves like we've seen recently is a trader's dream. So don't wait any longer. Sign up for your 2-week free trial to Market Insights today at the front page of TFNN.com.
No matter where you listen to TFNN programming, we want you to know you can always access your favorite shows on demand through TFNN.com. TFNN airs live programming every market day from 9 a.m. till 6 p.m. Eastern, and you can view each program by accessing Tiger TV through our homepage. We even have an easy link for all mobile devices, including iPhones and iPads, located at the top right-hand corner of the TFNN homepage. You can use your smartphone to view Tiger TV, but if you don't have a mobile connection that can keep up with streaming live video, then you can simply visit TFNN.mobi in the browser of your smartphone for live streaming audio of all of our programs. The mission of TFNN is to educate our audience directly and interactively through our interactive website and radio call and talk shows. TFNN is able to teach all levels of investors the technical skills needed to trade in today's marketplace. In order to get the best information possible, TFNN has assembled the most respected financial minds in the country to provide the most current news and comprehensive advice available. TFNN.com. Educating investors.
Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Daryl Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads. In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's Nadex.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
And welcome back, folks. Dow is off 49 right now. S&P down 1. We're going to check in on the currency pairs, some of the currency pairs. First, we start off with Steve-O's favorite. That is the euro, Japanese yen, because it tracks the U.S. markets so well out here. Now, that 0.786 Gartley pattern that has been in place here for the past 4 days or so, 4 or 5 days, which was in jeopardy of busting, did not break yesterday. It actually held. So that 0.786 Gartley sell pattern still in play out here. Now, as it would look like that area might get busted, that was really good news for the bulls out there. But that is still in play out here, the 0.786 Gartley sell. Now, you've got to go down into the intraday chart to get a feel for what's really going on here at the moment. And this has really made some beautiful patterns. Take a look at all these colored patterns. If you're just listening to us on the radio or your mobile device at TFNN.mobi, can't thank you enough for doing that. You can always catch the archive of the show on Channel 10. And what we're looking at is a a 30-minute chart of the euro Japanese yen. And it's got several expansion patterns, butterfly patterns, 1.272, 0.786 Gartley buys and Gartley sell patterns out there. I mean, just a thing of beauty with regard to the patterns that are being formed. Now, what it really has completed here is a 1.618. That shows 1.5 on my screen at 132.72 because that was the high that it made. But just a little bit higher is that 1.618 butterfly pattern that it formed out there. You know, we use these as guidelines, remember, just like they do in Pirates of the Caribbean. I think that's the movie out there, Jack Sparrow. Now, as the 1.618 butterfly, 1.5 butterfly was being formed, it was doing it on some less relative strength. That was an indication that, okay, the move was, and it was already in the oversold territory. Got that nice little bearish engulfing candle at 9 o'clock yesterday. Market did what? Moved down from that high, from being overbought to what? To getting into the oversold territory as it was making a low here this morning at 7 a.m. So another reason why you started to see the futures. So the futures, right, we take a look at the S&P futures. If you caught the first hour of the show, you know, I posed the question, do you ever wonder, you wake up and the futures are down and maybe you're short and you're going, yeah, this is great. And then all of a sudden you start to see things come back and you're wondering, well, why is that happening? It's because it's a living, breathing organism. You're breathing. I'm breathing, the market is breathing too. That means that it has to just simply go in and go out, go down and go up, and that's exactly what happens. And we utilize this EKG system to help us understand when those are about to occur out here. And inside the euro Japanese yen, because it tracks the U.S. markets so well out here, that was also getting into an oversold condition, and it had to work its way off, and that's all that it is doing now. So I believe this pattern here is in effect, and what we will see is we'll see the next pattern form on this. Well, what's that next pattern going to be? It's probably going to be an A to B equals CD down. It's probably going to be a Gartley buy type pattern. The A to B equals CD down is going to come off of the high here from 8:30 in the morning on July 24th. That was yesterday. Your B point now is going to be the low at 7 a.m. this morning. I don't know if the extent of the move is over. If it is, then you've got one heck of a large A to B equals CD down, because it will be more than a 1-to-1 A to B equals CD down. In fact, if we take a look at where it's really likely to head to, we just take a look at the retracement coming off of that butterfly, and it says about the 129.90, 129.70 area is where the euro Japanese yen will head to. And as it heads down there, so too will our markets. They will make their move lower out here. So that is on the euro Japanese yen. Always good to know what the currency pairs are doing, because they are really the ones that are controlling the marketplace out here. So hopefully that helps you as well. Let's go take a look at the queen and the pound out here, as long as we're in the currency area. If we take a look here at the queen still wants higher price, believe it or not. It looks like it wants to get up to 132.74. That will be its next move. But the way that I read this pattern here right now, it's got long and strong up to test at 134.15 to give you the next shot to actually go ahead and take a short on the euro yen. But at first it has to clear this 132.7 level. Now, we're taking a look at the daily chart here. It's neither overbought nor oversold, and therefore, and if we take a look at candles here, it's in between floors. Sweet 618 and sweet 786 out there, and yesterday's candle was not a bearish candle. This thing has not had any bearish candles since the low that was formed here back on July the 9th out there, and then one nice big bullish engulfing candle on July 10th. So it looks like we have a little bit higher price to go inside the euro. Now, the good news here is that if the well, actually, I don't know what the good news here. I kind of lost my thought. I'm going to see if that thought comes back to me, because what was I going to say? In any event, let's go look at the pound. Maybe it'll come back to me then. As we take a look at the pound, not really giving us a whole lot of clues out here as to what it wants to do. Well, I take that back. You know, I've got a pattern out here that's the 0.786 Gartley sell pattern, but I don't know that that really is what's going to form. If I can click on there, may have to get rid of it. And the reason that I say that is, you know, this thing here, the pound we're talking about, has made its retracement. It's made a 0.618 retracement coming off of that first leg from the June 17th high, 1.575, down to the low that was put in on July 9th, 1.481, and you can see that it's hit the 0.618 as exact as you can get. 1.5392, it got to 1.5391, so it doesn't get any better than that. And what we did get here was we got a reversal signal yesterday. We got a bearish engulfing candle, we got an evening star formation. So unlike the euro, which has not given us any kind of bearish signal, that is not the case on the Great British Pound. It has. So today's candle, somewhat irrelevant from the standpoint as long as it doesn't close too much higher than yesterday's close itself out there, and that will keep the evening star formation intact out here. So this may be it for the pound. Maybe that was the celebration of the newborn king out there inside Great Britain out there. Let's see. Let's go take a look at. Let's take a look at some of these stocks here that are popping and dropping in the markets here. So lead the charge to the upside is Priceline. Priceline and Baidu. Priceline's up $18, Baidu up 11. Let's go check in on Baidu and see what kind of volume is behind its move, because that could be setting up one heck of a, as I recall, it could be setting up one heck of a move. And no, it's not taking out its swing point. So Baidu has been selling off ever since that move up here. Give me a moment to delete that. So Baidu actually added session. Now, look, it's still a very positive candle, very positive session. It was positive candle and session, gapped up with 9.9 million shares. So, but it has been selling off really almost since the open. Looked like it was going to go ahead and get all the way back up here to the swing point of August 17th, but has not been able to do that, at least not as of yet. Interesting. Very, very interesting, as Schultz like to say. Let's take a look here at... we might as well take a look at Priceline. I'll put that up on the screen here since it is leading the charge up here. Priceline is just a beautiful-looking stock chart. Stop talking about Apple. Give Priceline. Of course, Priceline just wants to run underneath the radar. Priceline wants everybody talking about Google and Baidu and Apple because it's at all-time highs at $912, and it's made the best move. That's made the best move of all of those stocks off of the lows back in 2009 out here. This has a nice little sign of strength here most recently. July 8th, another sign of strength, 1.1 million shares out there that has not been tested. So nothing spectacular today, but nothing bearish really on this stock chart. Other than there was this island reversal, but that island reversal was because of I forget, some type of financing tool that was utilized for the acquisition of somebody. But nonetheless, that island reversal, nobody's stranded on that island any longer, so you can kind of, that just gives you an idea for how strong the stock actually is, because that is the most bearish reversal candle signal that you can find out here, is an island reversal. And when that gets taken out, as this one did here in short order, it took up until about the June 18th time frame. That was coming from May 21st. That's pretty short order for people to be, I wouldn't mind being stranded on an island for 30 days. I think I could handle that out there, most certainly. Maybe even a little bit longer. Depends on the island. You know what? You can go ahead and... I'll be stranded on the island of Lanai for the rest of my life. I think I would do just fine. As long as I've got my sticks with me and some golf balls, will be just fine. In any event, enough jibber-jabbering. Let's go take a look at some of these other stocks out. Let's take a look at Biogen, BIB. They were out with numbers before. They were trading up at 235-ish in the pre-market, but they've not been able to make that at the open. Now, it looked like this is really running into resistance here. This is important to be paying attention to, Biogen, BIB, because it's not able to get up over the resistance area of this gap down where we saw its first sign of weakness out here. And this has been a great, spectacular-looking stock chart out here. But on June 3rd, gaps down with 2.4 million shares. Now, that June 3rd area has held as resistance, 2.4 million shares as well. On July 22nd was the test, but good did not hold that. Came back down a bit more on with 1.7 million shares, so backs off with lighter volume on July 23rd. This morning, you're up with 1.1 million shares, but it can't get above that resistance area, and it's got good volume today. So that says, you know what? This has got some selling pressure in it. There absolutely has selling pressure inside Biogen, BIIB, because this is a great-looking stock chart here. This just like Priceline as well. I mean, this thing back in 2008 was at $39. Not as good as Priceline for sure, but this was at $39, and it's up at $229 right now. But selling pressure inside Biogen for sure. Today is a proof of that, absolutely. Let's take a look at Dunkin' Donuts out here. That's an IPO from not too long ago. And Dunkin' looks like it's done a little Dunkin' Munchkin out here. It opened up, and it has sold off ever since. Now, this is an IPO that takes you back, and it's not too bad. This one takes you back into the time frame of July of 2011. It's up towards its highs out here. Let's take a look at the volume here today. It got up to a high of 43.50, and it's right now trading out at 41.71 out there. Volume here, 1 million shares. So where is this thing pulling back to? It looks to me like, first June 24th, that is for sure, but it's already inside there. That candle only has 1.1 million shares, so it's coming in there a bit hot. That says the next move down in Duncan will probably be the June 3rd area, right around 38.73. Let's take a look at Facebook. Let's go see what Facebook, how that is trading, what kind of volume we have behind the Facebook move out here. FB is the ticker symbol. It's just, why is it escaping me on my screen? It's got to be out here. I know it's out here. Facebook. There we go, Facebook. So Facebook right now, trading out, and it's got a nice volume behind its move. So it's trading out at 33.30. It's up over its swing point from January 28th, which was $32.51, up there with some volume. Facebook is running into a supply line, though. So all those folks that were in Facebook in the early stages, the first couple of days, May 22nd of 2012, May 21st of 2012, finally those folks are getting some of their money back. And after Facebook trading all the way down to a low of $17, if you had bought it in the $33 range and you got a nice gift this morning, you woke up, what would you be doing? Would you be a believer in Facebook, or would you be glad to take your money? Well, it looks like in this case here, we've got folks that are just simply glad to get their money out of Facebook. Let's see, what else can we look at here? Let's look at D.H. Horton. D.R. Horton, DHI is the ticker symbol, and that is, I haven't looked at the housing sector here lately, but if D.R. Horton is any sign of it, it's got some troubles in River City. It's taking out a recent swing point, and it looks like it's doing it with volume. That swing point being July 8th, and the low on that is 1969. It has taken it out with volume, 7.3 million shares today. It did 7.5 million shares on July the 8th out there, and that really is your B point of a large A to B equals CD down. So that is spelling some trouble. Well below the 200-period exponential moving average now. Let's see where's a volume bar that could hold this thing in place here. Let's put this on a weekly time frame. Maybe the weekly will give us a little bit better picture of what this is doing. So here, this makes a 1 to 1.618, A to B equals CD. The A point coming back in November of 2008. November 21st, the week of, 379 was the number. The B point on this, April 30th, 2010, 1520. Your C point, your retracement down to October of 2011. Makes really an exact 1 to 1.618, A to B equals CD, and gives you the bearish reversal signal. Big old evening star reversal candle out here, the week of May 24th, 2013. So now let's go take a look at where the likely move is headed to. Let's just do nothing more than a normal retracement of the A to D swing points out here, and you can see that it's already, you can't see that it's already, it's very close to the .382 level, which is 1859, dead cat bounce area, but it looks like maybe 1294 may be the target for D.R. Horton, DHI, being the ticker symbol out there. TripAdvisor. We haven't looked at TripAdvisor, TRIP. That took a trip to Alaska, heading well north of the border here, and having a nice move with some good volume behind it. It is right now trading at $70.21. Good volume behind the move, 2.8 million shares. This has got everybody in this equity, with the exception of a few people that bought at the very, very top here today at $71.45. Everybody in this equity is in a profitable position. You got to love stocks like that, and you're going to have some good volume in this thing today. Not only is there going to be some good support at the gap from this morning, but you've also got a nice little high volume bar here on May 31st, 6.7 million shares out there to stop any fall that this might have inside TripAdvisor. Of course, you always have to be careful of a potential island reversal pattern, but most likely that is not going to occur on this equity. Right now, I've got the Dow down 49. S&P is off about 70 cents. Not a big deal there. The big deal, though, folks, and I do mean big deal, net declining issues, 328. The number, 275. The bulls are losing control. We'll be right back.
patterns, profits, and peace of mind.
Are you looking for a precision edge in the market? Something that can stack the odds in your favor? Then look into Larry Pesavento's trading newsletter.
Patterns, profits, and peace of mind.
In each weekly issue, Larry explains what's going to happen in the markets based on the pattern he sees developing and gives you actionable trade ideas based on those patterns. Plus, you'll get his detailed analysis on a variety of markets and sectors, including stocks, treasury bonds, the gold market, oil, the dollar, the forex market, and more. You'll get access to all the patterns Larry is seeing in the markets, plus the Astro Harmonics and powerful Bradley stock market model that Larry utilizes for less than $5 a day. An extremely potent combination that will give you the edge you've been looking for. Try Patterns, Profits, and Peace of Mind absolutely free for 2 full weeks. That's an $85 value. Yours free when you register right now.
Get Larry's Patterns, Profits, and Peace of Mind.
And get the edge you've been looking for.
Tom O'Brien's weekly newsletter, The Gold Report, has helped subscribers for over 10 years navigate the high-risk world of exploring and producing gold companies. And now's a great time to sign up for a free month-long trial to see the kind of insight that Tom delivers for his subscribers on a weekly basis. Every Monday, Tom O'Brien issues a quick update on the metal market, giving you his take on the HUI, XAU, GLD, dollar, bonds, and much more. Tom follows Monday's update with a full gold report, which is delivered to subscribers Tuesday afternoon with detailed coverage of 24 separate gold or metal stocks, as well as another 10 to 15 stocks that he lets you know are on his potential watch list. Get your month-long free trial to the Gold Report today by visiting the front page of TFNN.com. Don't spend another year navigating the metal markets on your own. Act early in 2013 and make the most of your gold and metal market investments. David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
Nowhere, spelled N-O-W-H-E-R-E. At one point, we've all been there, whether it be our health, career, or our finances. Some might be there right now. So where are you when it comes to your trading and investing? Better yet, where would you like to be? The good news, I can take you from nowhere to now here right now. Same letters, N-O-W-H-E-R-E, just a totally different emphasis and focus. Hi, I'm Steve Rhodes with TFNN, and on July 25th at 6:30 p.m., I'm going to share with you a trading strategy that I began on May 10th when the S&P was at 1627 and closed at the same price 8 weeks later. That's right, the S&P went nowhere versus a trading strategy that produced a 100% hypothetical return in that same period of time, and it's now here for you. Subscribers to my daily newsletter service, Mastering Probability, have free access to this exciting live workshop. The trend is your friend. All the details are on the homepage of TFNN.com. Decisions shape your destiny, and your trading destiny is now here for you.
Catch Basil Chapman as he uses his Chapman Wave methodology to call the markets. The Tiger Technicians Hour, next on TFNN.
Welcome back, folks. Dow down 51 right now. S&P really unchanged, down 70 cents. So let me recap over the course of the next 4 minutes here what to be paying attention to for the rest of the day for your trading session. First on the ES Mini, the 30-minute chart for the ES Mini. It formed a little shooting star candle here as we were coming into the 10:30 session. So we've got another 6 minutes left in this 30-minute session here. If you get a lower close, which we've got right now. So it's at 1679.75. As long as it doesn't take out, it doesn't close above, I'm going to say we'll just make it the easiest, the most conservative, 1679.75 out there. than what you've. No, is that right? Yeah, I'd say 1679.75. Then what you've got out here is confirmation of a shooting star candle. It says that the high has been placed inside the ES Mini right now. Now the shooting star is just like here's the hammer candle from yesterday coming into the 2 o'clock session. If you're watching us on Tiger TV, that was followed up by a bullish engulfing candle. You'd like to see the exact opposite now taking place here, a little bit lower close. Which means the close here was at, 1680.25. As long as there's not a close above 1680.25, the shooting star really remains intact out here. A close below 1679.75, that would be just simply better. It would be some additional follow-through. If you don't see that, then it says that the ES Mini may not be done making a move to the upside. It certainly has some room from a relative strength standpoint. But you've got the first bearish candle that showed up here on the 30-minute chart, and that was as we came into 10:30. So that's the first thing to be paying attention to. Second thing is going to be the VIX index here. The VIX index is trying to break through the trend line. If it does break above that trend line, I'm going to assume that that's right around about the 1350 type range today when it closes. That's at 13 1/4 right now. The VIX will have gotten back inside the trend. It'll be below the 50-day exponential moving average, but it'll suggest that the top was put in a couple of trading sessions ago. So that is the second thing that you're going to be paying attention to. The third thing most certainly is going to be net declining issues coming at the 4 o'clock session out there. Right now it's at minus 281, only needs 275 for the bears to officially take control, and it's the New York Stock Exchange that you really want to be paying attention to. I would say if you just focus on those three things for the day, that will give you your signal as to who is in control of the ball in the marketplace. So that should be pretty easy to follow. And if assuming that I'm around at 4 o'clock, I am preparing for that 6:30 workshop this evening. And folks, if you are not a newsletter subscriber, it is not too late to get in on this workshop. You absolutely want to do it. I'm going to teach you a set of trading tools. Doesn't matter what your technical skill is, you want to have this in your bag. Have you ever seen something come off of the bottom and you said, well, it didn't fit my pattern, or you didn't get in on it, and how could I have? I'm going to teach you how to actually do that. And I'm going to teach you a trading style that has really worked well. So you can get the easy way to do it is to go to the homepage of TFNN.com, click on my name, find the newsletter service, Mastering Probability. Go ahead and sign up for it. It's got a 30-day unconditional money-back guarantee. So if you've never used my services, it basically costs you the effort of going ahead and signing up and putting down a credit card deposit in order to get value. If you've never been to one of my seminars, folks, even though tonight is just a 1-hour seminar, you get a ton of education. I mean, I will teach you something that has been sitting in front of you all along, and you never actually realize it. So again, go ahead and sign up for that. That is for this evening. But if I'm around in the den, I'll make sure I post whatever the net declining issues are as we come into that 4 o'clock hour. So stay tuned. Basil Chapman is up next, and it is a terrific Thursday. That means we get Larry Pesavento today. We've got the full lineup because after Larry, it's Darryl Martin, then David White, Andy Hecht, and the Tom O'Brien Show from 4 to 6. And I'll be back on at 6:30. And join me for the Trend is Your Friend workshop, folks. Have a great Thursday. Look forward to seeing you tonight or tomorrow morning. Take care.
Recently, Basil Chapman has had some outstanding trades in his newsletter, The Opening Call. Each morning by 9 a.m., Basil uploads his newsletter to the TFNN servers so that his subscribers can access his expert trading advice. Basil gives his take on the direction of key indices and updates any active trades that his subscribers are currently in. Just recently, Basil subscribers closed out a short position in Chipotle Mexican Grill, CMG, for more than an $86 profit per share, over a 20% gain in just one position. If you'd like to try out Basil Chapman's newsletter, The Opening Call, then visit the front page at TFNN.com and click Trading Newsletters. There you'll find Basil's newsletter, The Opening Call, where you can request a free sample copy. Also, don't miss Basil's program, The Tiger Technicians Hour, Monday through Friday, 11 a.m. Eastern, on TFNN.